we are doing problem number 9. Yesterday we calculated up to purchase consideration, I think. We started with calculation of goodwill. How did we calculate goodwill in that problem? We took capitalized profits. Out of that we subtracted actual capital employed. We got the goodwill figure. Okay. How did we get capitalized profits? We were given average profits for 3 years. Out of the average profits, we have excluded the income from non-trade investment. So we came to know about the profits which have been generated from the business. Then we have divided it by the normal rate of return percentage to calculate capitalized profits, or we also call it as the normal capital employed. So to earn the profits, how much capital we should have invested. Then we compare it with actual capital employed. Okay. How to calculate actual capital employed? We have taken all the assets except the non-trade investment, and we have subtracted all the liabilities due to outsiders to arrive at the capital employed figure. Then capitalized profit minus capital employed was the value of goodwill. Then we had to decide the swap ratio, the purchase consideration. So how do we do that? So first of all, we found out that we have to pay 9,05,000 to the shareholders of B Limited. Not B Limited, Big Limited. And how is Huge Limited going to pay 9,05,000 to Big Limited? By allotting its shares. Each share of Huge Limited was valued at 40.4 rupees, and we came to an understanding that we have to allot 22,400 shares of face value 10 rupees each, but at an agreed value of 40.4, and we have to pay cash per fractional share. In our calculation we got a fraction 0.99. So we said per fractional share we are going to pay cash. It is 40.4 into 0.99. We said 40 rupees of cash has to be paid to the shareholders. Yes, I think till here we have completed. Let us now start passing the entries in the books of Huge Limited. We will write entries in the books of Huge Limited. Entries in the books of Huge Limited. Underline, write down. First entry. When purchase consideration is made due. What is the entry you pass? Business purchase account data to liquidator of Big Limited. Business purchase account data to liquidator of Big Limited. How much you have promised to pay? Please tell me. 9,05,000. Business purchase account data to liquidator of Big Limited, 9,05,000. Next, entry for takeover of assets and liabilities. Before we start passing the entry, please come to the last paragraph of the problem. Both companies decided to cancel the proposed dividend as it has already not been approved by the board of directors. So what they have done? They have decided to cancel the proposed dividends. That means they want to give it back to the profit and loss account. So go to the balance sheet. go to the balance sheet in your textbook, what you'll do is you'll put an arrow from proposed dividend to P&L account credit balance. From proposed dividend to P&L account. What does that mean? It has been created out of P&L account. Now we are giving it back to the profit and loss account because companies have decided to cancel it. Is it clear? So in your balance sheet, in the textbook, in the balance sheet, what you do, you just put an arrow. Proposed dividend goes back to P&L account. Upwards. Arrow should point upwards, not downwards. That means that proposed dividend is going to be given back to the profit and loss account. Okay. Now start writing the entry. We have to now incorporate the assets and liabilities. We already know that we have to incorporate goodwill of 3,80,000 rupees. Or if you have a doubt, we can keep that pending and at last we can put it as balancing figure also. So write goodwill account tar question mark. See the balance sheet of Big Limited. Sundry fixed assets 4 lakh. Sundry fixed assets 4 lakh. Non-trade investments 50,000. Non-trade investments 50,000. Inventory 50,000. Trade receivables 80,000. Trade receivables 80,000. Advance tax 20,000. Cash at bank 1,30,000. 2. 12% debentures. To 12% debentures 1 lakh. To trade payables 45,000. To provision for tax 60,000. So what about proposed dividend? It was cancelled and it was returned to the profit and loss account. No. To 12% debentures. To trade payables. To provision for tax. We are not going to include proposed dividend because it was cancelled. Continue. To provision for tax. To business purchase. To business purchase. To business purchase 9,05,000 rupees. Boss, goodwill, balancing figure, goodwill. Entry should be 3,80,000 goodwill. Goodwill 3,80,000. See, how was 9,05,000 decided, boss? It was based on net assets. PC is equal to net assets. Net assets includes goodwill. So PC should be allocated to the net assets and part of net assets is goodwill. So 3,80,000 should be debited to goodwill account. Is the entry tallying? We continue next. Next. Discharge of PC. discharge of PC. Write down the entry, discharge of PC. Liquidator of big limited account return 9,05,000. Liquidator of big limited account return 9,05,000 to equity share capital. To equity share capital. You will write 22,400 into 10. That was decided yesterday now. How many shares are we going to allot? 22,400 into 10 rupees face value. 2,24,000. To securities premium account. To securities premium account. $22,400 into 30.4. $22,400 into 30.4. What is this 30.4? Premium. How much is it?
6,80,960.
6,80,960 rupees. To bank. 40 रुपए कैश भी पे किए ना अपन. We have paid 40 rupees cash also. To bank. 40 rupees. Not over yet. Not over yet. If you see the balance sheet, you have one statutory reserve there, export profit reserve. You can remember investment allowance reserve, export profit reserve, statutory reserve. These three items, if it appears in the balance sheet liability side, we call them as statutory reserves, and they have to be maintained in the books of the purchasing company till the time law requires it. Is it clear? So export profit reserve is a statutory reserve which has to be maintained even in the books of the purchasing company. In the case of amalgamation in the nature of purchase, this reserve has to be incorporated by passing a specific entry. What is the entry you have to pass? Amalgamation adjustment account return to pass the entry. Amalgamation adjustment account return. Entry for incorporation of export profit reserve. Amalgamation adjustment account return to export profit reserve. How much amount? How much is there in the balance sheet? 40,000. That's it. I think you have covered all the entries. Now can you prepare the balance sheet of Huge Limited after amalgamation in nature of purchase? Let's start. Schedule 3 balance sheet of Huge Limited. Don't write Schedule 3, just write balance sheet of Huge Limited. Format is Schedule 3. And dictate. Right, equity and liabilities, note number and rupees. equity and liabilities, note number and rupees. Start. You write shareholder funds, underline. Shareholder funds, underline. Shareholder funds, underline. Below that, first item, share capital. Take a calculator. Press on button. 7 lakh plus 2,24,000. 7 lakh plus 2,24,000. So what is this 2,24,000? Shares allotted to Big Limited. What is 7 lakh? My existing capital. 7 lakh plus 2,24,000. How much is it? 9,24,000. Next. Reserves and surplus, underline. Reserves and surplus, underline. If share capital is A, this will be B. Reserves and surplus, underline. General reserve. General reserve. I think you only have to incorporate huge limited general reserve because big limited general reserve is not going to come into our books. It is going to be enjoyed by the shareholders. So general reserve 3,50,000. Profit and loss account. Please be careful here. Profit and loss account. Wait. 2 lakhs. Plus 1,40,000, it will be 3,40,000. 2 lakh plus 1,40,000, 3,40,000. Sir, what is that 1,40,000 you are adding? Proposed dividend was removed, now it is given back. Whose proposed dividend? Huge limited proposed dividend. 2 lakh plus 1,40,000, 3,40,000. I made you to put an arrow, no boss, from bottom to top. What? I'll maintain, write down, export profit reserve. Next item, export profit reserve, 1,10,000. How 1,10,000, sir? 70,000 which is there in my books. And from his books I have incorporated 40,000, no. I pass an entry, amalgamation, adjustment account, debtor to statutory reserve, export profit reserve. So ordinary is credit balance of 70,000, another credit balance of 40,000 is incorporated. 70 plus 40, how much? 1,10,000. Now please go to that entry and put a tick. As soon as you consummate the items given in the entries, please put a tick. Next, I think we have finished all reserves and surplus. We don't have any other item like money received against share warrant. We don't have share application money pending allotment. The next major item on liability side, non-current liabilities. Non-current liabilities. I think we forgot securities premium. Sorry. Add one more item in reserves. Securities premium. Sir, where will I find securities premium? Go to the third entry in the books of purchasing company. Go to the third entry in the books of purchasing company. 6 lakh 80,960. Please put a tick there. Now come back to the balance sheet. Non-current liabilities. Underline. Debentures, 12% debentures. One lakh plus 1 lakh, 2 lakh. Go to the entry, put a tick. Second entry, 12% debentures were taken over, no, at par. Please put a tick there. That's it, no other items in non-current liabilities. Next, current liabilities. Current liabilities. Trade payables. 85,000. How 85,000? 40 plus 45, 85. Go to entry number 2, tick mark. Then provision for tax. Next, provision for taxation, 1 lakh plus 60,000, 1 lakh 60,000. Proposed dividend was cancelled. Do you have any other item which appears in the balance sheet liability side? That's it. Total. $28,49,960. Now come to assets. Assets heading. Assets note number rupees. Write down under assets. Non-current assets underline. Non-current assets underline. Under that, what do we show? Fixed assets. I think it's already given to us. 950 plus 4 lakh. 13,50,000. We need not break down fixed assets into tangible, intangible. I think you have to have intangible asset is there, no? So under fixed assets you will write tangible. Under fixed assets you will write tangible 13,50,000. Under fixed assets you will write tangible 13,50,000. B, intangible. Goodwill is there, no? 3,80,000. Under fixed assets, tangible 13,50,000, intangible 3,80,000. Clear? Now after fixed assets we have non-current investments, no? Under non-current assets, fixed assets, then you have non-current investments. You write non-current investments. Non-current investments 2,50,000. Do you have any long-term loans and advance etc. in the problem? No. Now you write current assets. Current assets, inventory, trade receivables, inventory add up 155, inventory 75 plus 80, 155, sorry, inventory 1,70,000, 120 plus 50, inventory 1,20,000 plus 50,000, 1,70,000. Trade receivables 1,55,000. Advance tax is shown under short-term loans and advances, no? Short-term loans and advances, subheading advance tax 1 lakh. Short-term loans and advances, it is part of current assets only. Short-term loans and advances 1 lakh. Bank balance, cash and cash equivalents. Cash and cash equivalents. Under that, bank balance. Cash and cash equivalents. Bank balance. Wait, be careful with bank balance. 2,75,000 plus 1,30,000 minus 40 rupees. Minus 40 rupees. It will not tally. Wait, we have forgotten one big item. Amalgamation adjustment account. It should appear as other non-current assets. Other non-current assets. Do you have some space before you started current assets? Just below, just above current assets, you will add one item. Other non-current assets. Within brackets, amalgamation adjustment account. Other non-current asset. Amalgamation adjustment account. Please put star marks there. Very easy to forget in the examination. Other non-current assets. Amalgamation adjustment account. How much balance? 40,000. Now it should tally. Amalgamation adjustment account. Now it will tally. Come to page number 6.26. Problem number 7. Page number 6.26, problem number 7. A Limited and L Limited amalgamated to form a new company, LK Limited. The financial position of these two companies on the date of amalgamation was as under: goodwill 80,000, land and building 4,50,000 and 3 lakh, plant and machinery 6,20,000 and 5 lakh, furniture and fitting 60,000 and 20,000, trade receivables 2,75,000 and 1,75,000, Stores and inventory 2,25,000 and 1,40,000. Cash at bank 1,20,000 and 55,000. Cash in hand given to you. Share capital, equity share capital of 100 each, 8 lakh and 3 lakh. 7% preference share capital of 100 each, 4 lakh and 3 lakh. 5% debentures, 2 lakh. General reserve, 1 lakh. Profit and loss account, credit balance of K Limited and N Limited, 371, 375 and 97, 175. Trade payables, 1 lakh and 2 lakh, 10,000. Secured loans, nil and 2 lakh. The terms of amalgamation are as under. The assumption of liabilities of both the companies. Issue of 5 preference shares of 20 each in LK Limited at rupees 18 paid up at a premium of rupees 4 per share for each preference share held in both the companies. Issue of 5 preference shares of face value 20 each but paid up as 18. What does that mean? That means you will credit 18 rupees to your capital account, paid up at a premium of 4 per share. You will credit 18 rupees to your capital account, but we are going to collect 4 rupees more than that. That means 18 plus 4, 22 rupees is the value of each share. 18 will be credited to the capital account and 4 rupees will be premium. Next, issue of 6 equity shares of 20 each in LK Limited at the rate of 18 rupees paid up at a premium of 4 per share for each equity share held in both the companies. So again, equity shareholders also, what are we saying? You give away 1 equity share, will allot you 6 equity shares. For each equity share will give a credit to your capital account for 18 rupees, but you have to pay us a premium of 4 rupees. That means you have to pay 22 rupees. So shareholders, we are saying we are going to pay you 22 rupees, per share value is 22 rupees, but 18 rupees will be credited to your capital account and 4 rupees will be credited to securities premium. In addition, necessary cash should be paid to equity shareholders of both the companies as is required to adjust the rights of the shareholders of both the companies in accordance with intrinsic value of shares of both the companies. So they want some more cash also to adjust the value according to intrinsic value. Issue of such amount of fully paid 6% debentures in LK Limited as is sufficient to discharge 5% debentures in K Limited at a discount of 5% after takeover. B point. The assets and liabilities are taken over at book values. Inventory and trade receivables for which provisions at 2% and 2.5% respectively to be raised. So you have to raise a provision of 2% and 2.5% on inventory and trade receivables. The trade receivables of K Limited include 20,000 from due from L Limited. The LK Limited is to issue 15,000 new equity shares of 20 rupees each, 18 rupees paid up at a premium of 4 per share so as to have sufficient working capital. So the new company is going to issue some shares to the public also. Prepare ledger account in the books of K Limited and L Limited to close their books of accounts. Before we start doing the ledger accounts, let us first of all talk about purchase consideration. And in purchase consideration, somewhere we are talking about intrinsic value of the share. So let us first of all calculate. Write down calculation of net assets belonging to the shareholders. Particulars. Which are the two companies? K Limited and L Limited. Let's start. The assets and liabilities are taken over at book values. Inventory and trade receivables for which provisions of 2% and 2.5% respectively to be raised. So you have to take over the assets and liabilities at book values. See the book and tell me what are the assets taken over. Goodwill, Goodwill, how much? 80,000 and nil. Next item. Land and buildings. 4,50,000 and 3 lakh. Plant and machinery. 6,20,000. 5 lakh. I think there is no revaluation loss in this, no? After this, furniture and fittings. How much? 60,000, 20,000. After that, be careful here, trade receivables. After provision, we are saying you have write off some amount from trade receivables. How much you have write off from trade receivables? Trade receivables, 2,75,000 minus 2.5%. Tell me how much is it? 2,68,125. What about L Limited? How much?
1,70,625.
1,70,625. Next, inventory. Inventory also after provision. Tell me book value minus 2%, how much is it? 2,20,500 and
1,37,200.
1,37,200. It's after 2% provision, no? Next, cash at bank. Cash at bank. How much, please tell me? After that, cash at bank. Cash in hand. 41,375. 17,175. Total the assets and tell me what is the value now. Total the capital, how much is it? 16 lakh. 18 lakh 60,000.
11 lakh 60,000.
12 lakhs. Liabilities taken over. Liabilities taken over. 5% debentures, 2 lakh and nil. 5% debentures, 2 lakh and nil. How they will discharge it is their metric. Our liability is taking over, that's it. Next, trade payables. Trade payables. Trade payables 1 lakh, 2 lakh 10,000. Next, secured loan. How much? Nil and 2 lakh. No preparations. We'll just first find out is the net assets available to shareholders? Net assets available to shareholders. 15 lakh 60,000. See, if the company gets this, no, they'll be happy. Selling companies, if they get this amount, this will be happy because this will be sufficient to repay the preference shareholders and also the equity shareholders. See, don't be in a hurry. So we have to pay totally 15 lakh 60,000 and 7 lakh 90,000. This is what is belonging to the shareholders, both equity and preference. Now write down. Next statement, calculation of purchase consideration. Calculation of purchase consideration. Calculation of purchase consideration. Particulars, K Limited, L Limited, 3-column table. Particulars, K Limited, L Limited. Leave 4 or 5 lines space and you write total. Leave 4 or 5 lines space in that and you write total. Total PC would be 15 lakh 60,000 and 7 lakh 90,000 because that is the intrinsic value of the company, no? This is the total PC to be paid, 15 lakh 60,000 and 7 lakh 90,000. Now please tell me who are waiting for these amounts, boss? Two people, preference shareholders and equity shareholders. Whatever you pay to them, part of purchase consideration only, no? Please tell me, these net assets belong to whom? Not only equity shareholders, preference shareholders also, because they have not got their money back, no? So the total amount which the company is going to pay to shareholders is going to be this. Okay, how are we going to pay it? Write down now. First item in PC, preference shares in purchasing company. Preference shares in purchasing company. Now we'll do some calculation. Press on button. See the first paragraph, what is it saying? Issue of 5 preference shares of 20 each in LK Limited at the rate of 18 rupees paid up at a premium of 4 per share for each preference share held in both companies. So if you are holding 1 share in selling company, I am going to give you 5 shares. 18 rupees I will credit to share capital, 4 rupees will credit to securities premium. That means each share of the purchasing company is valued at 22 rupees. For 1 share in selling company, I am going to allot 5 preference shares. Value of each preference share is 22. 4 rupees I will collect as premium and 18 rupees I am going to credit to securities premium. So press on button on your calculator. 4 rupees to securities premium. 22 only, no? Press on button on your calculator. See K Limited. How many preference shares are there? 4,000. 4 lakh divided by 100. It is how much? 4,000 preference shares. For each preference share, how many preference shares we are going to get? 5. 4,000 into 5. 4,000 into 5. How much is it? 20,000. Each preference share is valued at 22. But out of 22, 18 rupees will be credited to capital and 4 rupees will be credited to securities premium. Agreed value or sale value of each preference share of purchasing company is 22 rupees. So write down. In K Limited column we will write 4,40,000. We will show the description below. We will show the description below this table. Okay. How many shares at what price will show below. So we will say 4,40,000. Similarly, L Limited. See, tell me how many preference shares are there? 3 lakh divided by 100. It is 3,000 preference shares. For each preference share, 5 preference shares. 3,000 into 5. 15,000. What is the value of each preference share? 22. 3,30,000. Next, equity shares. Now see paragraph number 3. Issue of 6 equity shares of face value 20 each in LK Limited at the rate of 18 paid up at a premium of 4 per share for each equity share held in both the companies. So again, issue price of each equity share is 22 rupees. For 1 share in selling company, purchasing company is going to allot 6 equity shares now. Issue price of each equity share 22, face value 18. You can say credited to capital account 18, 4 rupees premium. So you type on a calculator, tell me K Limited how many equity shares are there? 8 lakh divided by 100, 8,000 equity shares are there. Do it on the calculator, 8,000 into 6. 48,000 into 22. 10,56,000. Next, for L Limited, how many equity shares are there? 3,000 equity shares into 6, 18,000 equity shares into 22. 3,96,000. Now please tell me, was the payment in the form of shares sufficient so that the companies were able to get their intrinsic values? No. So balance amount has to be paid in cash. So write cash, balancing figure. Who will get this cash? Not the preference shareholder, equity shareholder. Because residuary interest who has? Equity shareholder has. Both companies 64,000?
Yes, sir.
Okay. Now you write discharge of PC. How is it discharged? I will give it in paragraph form, not in table form, so that it's easy for you to follow. You write discharge of PC. First with K Limited. K Limited. You write 20,000 preference shares. 20,000 preference shares at an issue price of 22 rupees, paid up 18, premium 4. What do you mean by that paid up 18, premium 4? I am issuing the preference share for 22, but out of 22 rupees I am going to credit 18 rupees to capital and 4 rupees I am going to credit to securities premium. Face value of each share is 20, but paid up is 18. That means 2 rupees can be called when the company wants, and the shareholders would have to pay that money to the company. Is it clear? So we will say 20,000 preference shares, issue price is 22, but out of 22 rupees, 18 rupees will be credited to capital and 4 rupees will be credited to securities premium. What is the face value of each share allotted? 20, but paid up is only 18. So remaining 2 rupees, whenever LK Limited calls, you as the holder of preference shares have to pay money to that company. Is it clear? Next. Not over yet, it's only description of preference shares. How many equity shares were allotted? 48,000, no? 48,000, no? Write down. 48,000 equity shares at an issue price of 22. 48,000 equity shares at an issue price of 22. 18 rupees paid up. First, listen to me. Purchasing company is actually issuing its shares. The purchasing company is taking over the assets and in return it is allotting shares. So it is actually collecting money from the, we can say, selling companies. But they are not collecting cash, they are collecting assets. So So I am collecting 22 rupees per share. I am saying out of 22 rupees collected, 18 rupees I will credit to share capital account and 4 rupees to securities premium. So we will say 48,000 equity shares of 20 at issue price of 22, 18 rupees paid up, 4 rupees premium. ₹4 premium.
Yes.
Clear everyone? Cash 64,000. Similarly, can you describe the purchase consideration for L Limited also? Purchase consideration for L Limited. Description: 15,000 preference shares. Issue price 22. Paid up 18. Premium 4. Preference shares at an issue price of 22, paid up at 18, premium 4. Then how many equity shares was? 18,000 equity shares at an issue price of 22. At an issue price of 22, 18 rupees paid up, 4 rupees premium. Cash 64,000. That's it. The problem requires you to prepare the ledger accounts in the books of K Limited and L Limited. Can you do it on your own? Books of the selling company, boss. Very easy, you know. Or I'll show one company books, second company books you do on your own. Write down. Books of K Limited, quick. See, out of 15,60,000, I'll go by your approach also. Net assets available to shareholders 15,60,000. If you give face value to preference shareholders, will they agree? How much you have agreed to pay them? 4,40,000. So out of 15,60,000, subtract 4,40,000, you will come to understand what is available to the equity shareholders. Out of that, you have already agreed to allot some equity shares. Remaining amount you have to pay in cash. You cannot subtract the face value here, because out of 1560, some amount is agreed to be paid in preference shares, and how much you have agreed to discharge? 4,40,000. That you have to subtract. But it was at book value, no? The difference between the last problem and this problem is, there it was preference share capital at book value. Here it is at not at book value. You are paying some extra amount also to him, no? So continue. Write down in the books of K Limited. Books of K Limited. Let us start. Tell me what are the accounts we have to open? Realization account. Realization account. Bank account also we need not open because cash and bank, cash in hand was also taken over, no? Then we can straight away open the purchasing company account, LK Limited. Equity shares in LK Limited. Preference shares in LK Limited. Some cash also is going to come, no? Cash which is going to come from LK Limited. Cash which is going to come from LK Limited. I'm right here. Cash from LK Limited. Then preference shareholders account. Equity shareholders account. Let us start. A Limited equity share capital 8 lakh transferred to equity shareholders account by equity share capital. How much? 8 lakh. Next item, preference share capital 4 lakh by preference share capital 4 lakh. Have you all prepared the account? First of all, tell me. Equity shareholders 8 lakh equity share capital, preference shareholders preference share capital 4 lakh. Next, 5% debentures 2 lakh. It is taken over by the purchasing company, hence I am credited here. 5% debentures. How much? 2 lakhs. Profit and loss account 371, 375. It is credited to equity shareholders by P&L account. What is the number? 371, 371, 375. Trade payables 1 lakh. Liability taken over by trade payables. How much? 1 lakh. Secured loan is not there in K Limited. Goodwill, land and building, plant and machinery, furniture and fittings, trade receivables, stores and inventory, cash in hand, cash at bank. Everything is transferred to the realization account. To goodwill. Tell me what is the number? Quickly tell me the other numbers. To land and building. Next, to plant and machinery. 6 lakh. Next, furniture and fittings. 16,000. Next, trade receivables 2,75,000. Next, stock. Boss, at book values only. Don't think about agreed values here. We are closing the books of accounts. Stock 2,20,000. Next, after stock, cash at bank. It is also taken over. 1,20,000. Cash in hand 41,375. Everything has been taken over, including cash balance and bank balance. Make the purchase consideration due now. Make the purchase consideration due. What is the internal right for purchase consideration due? LK Limited account at R2 realization account. LK Limited, not Y. By LK Limited. How much? 15 lakh. you all completed? Now take money from LK Limited. We are going to receive equity shares, preference shares and cash. So buy preference shares. Buy preference shares in LK 4,40,000. Preference shares in LK to LK Limited 4,40,000. Correct?
Yes, sir.
See the purchase consideration breakup.
Yes, sir.
What is the value of preference shares you are taking from LK? 4,40,000. Buy equity shares in LK.
10,56,000.
Buy cash.
64,000.
To LK 64,000. There are only two people waiting for the money, preference shareholders and equity shareholders. Let us send the preference shareholders first. These shares we are going to hand over to preference shareholders. Buy preference shareholders 4,40,000. 2 preference shares. Look at the board. Against a liability of 4 lakh, they have taken an asset worth 4,40,000 loss for the company. Transfer it to realization account 40,000 excess. To preference shareholder 40,000 excess amount paid. Now everything is settled except shareholders. Now we can calculate realization profit or loss. Please tell me what is the realization profit or loss? Loss we have by equity shareholder. Balancing figure loss. Now let us hand over the remaining assets. Equity shares we have, give it to the equity shareholders. It's not P&L. Okay, correct. Let us hand over the equity shares. 2 equity shares, 10,56,000. by equity shareholders 10,56,000. Hand over this cash also to equity shareholder by equity shareholder 64,000 to cash 64,000. Now account should tally. Not tally. Can you quickly complete the books of L Limited also? Similarly, quickly complete the books of L Limited.